Hey, what's up, guys? Sam here, kicking off the noon session for March 15th, 2023. Good to see you. Good to see you. Hope you're staying on the right side of all of this. It was completely unforeseeable. Nobody could have seen this coming. If only somebody could have warned us. Well, we'll get them next time. All right, so today we actually have an agenda, and I'm actually broadcasting somewhere in the world. I think it's going to YouTube. But we're going to be talking about the differences in support and resistance. Now, as the world burns, this is, of course, a fascinating topic. But what we'll do is we'll go as long as the conversation allows for the support and resistance dynamics. And then I'll cut off the YouTubes, and I'll take any questions if you have any here in the live room. And then we'll call it a Wednesday. All right, so I think we're good. So let's start here. So we're going to be talking about the differences between support and resistance. It's going to be an incredibly easy topic for us, but it is something I guess I took for granted that most people just knew this, but it seems like most people actually don't. So I'm going to hopefully get you squared away here. So bear with me just a second. And I'm going to pull up some notes here for us very quickly. You don't need to take notes. You'll remember all of this, I'm sure. So differences between support, let's be more specific, trend, SR, and structural SR. So trend SR. Anyone in the live room care to take a stab at that in terms of what you're looking for? What would you be looking for trend, support, and resistance? Don't be shy. Every answer is wrong except one. Let's see, highs and lows, higher highs, higher lows. Yeah. So that counts. Yeah. So let's just mark it up here. Higher highs and higher lows, right? Now, of course, flip all of this or down or trend down, right? If you're looking for a bear trend, which will be the modality that you will all experience for the next couple of years, then you just flip all of this. But let's just speak for an uptrend. The other thing I would look for is stacked moving averages. And this is where most people get it wrong. Because they're so trained on always saying that the 21, by the way, for those of you watching on the YouTube, the green line is the 21 EMA, the blue line is the 50 SMA, the red line is the 200 SMA. And those are the only three moving averages I use. You can certainly use an 8. I'd find it superfluous. But most people just always assume the 21 is support. And that's not really how it works. The 21 is only support when it looks like this. You have to have the 21 with an angle up. You have to have the 50 with an angle up. And ideally, you have to have the 200 either with an angle up or at least flat, right? So that's what it means by stacked moving averages. So let me just add an additional point here. 21 EMA above 50 SMA above 200 SMA, all sloping up. That's important. And that's basically it. So very simple stuff. Very, very simple stuff. The real kind of, I think, the takeaway here is just understand when to use moving averages because you shouldn't always be using them. So, for example, this is just a really good example of trend, right? This is, you just see this and you know that it's trend because you could just cheat and you look at the moving averages. If you have the trend oscillator, you could use that. But somebody give me a ticker that doesn't move. Something like maybe like a Pfizer, maybe. Anyone have a ticker that doesn't really move too much? Yeah, this will work. Yeah, this will work. That looks like garbage. So in this instance, notice the difference. We just looked at something that has pretty decent trend, right? The moving averages were stacked, higher highs, higher lows. Here, you see all your moving averages are sideways. It just looks like mom's spaghetti. In that instance, you don't want to use moving averages, right? Because they're worthless. Moving averages, when they go sideways and intertwine like this, are going to be mostly worthless. So let's build out the second point here. And this will be a quick session because it is very simple once you see it. Structural support. We use this when we do not have trend. Because most of the time, actually. Most of the time you actually won't have trend. So a couple points. Moving averages will mostly be sideways or mom spaghetti. That's the technical term for it. And in that instance, we want to ignore the moving averages, except the 200. And we then rely on previous highs and lows. So pretty simple stuff there, right? Pretty simple stuff. If you have trend, you can use the moving averages. If you do not have trend, ignore the moving averages, use structural support and resistance. So what is structural support and resistance? Well, it helps to have the indicator. You don't need it, certainly. I mean, I don't even need it, and it's my indicator. But this indicator here, it's called the swing levels. Basically, just you see how it's drawing in the previous highs and lows. So that's basically it. So when you have a chart here like Pfizer that looks like it just, a total mess going sideways, um, then you want to rely on previous lows and previous highs to buy. Anything that happens between a previous high and a previous low is usually just messy and noise, right? Your advantage will typically be, right, and be willing to use zones as well, right? Keep in mind, markets are not as easy as people want them to be. So in this instance, you can see here you have a resistance zone, and down here you have a support zone, right? And anything that happens in between, you just don't want to even care about it. And isn't it funny how when it breaks support here, it goes right back to the top of resistance. And the new support level becomes a new support level. So I believe that might be good enough. Let me know if you have any questions on that, or if you want to look at any ticker. And maybe let's do that because I do think this is pretty simple. I'll share this with you. I'll leave it up there for those of you on the YouTube. If you want to take a screenshot of this, go for it. I'll also share it with you guys in the room. But if you want to look at any tickers, we got like 5 minutes. I do want to get back to trading, so throw them in the chat. We'll take a look at them, and I'll tell you what I see and what would be the best thing to do. Do not be shy. On the Dixie, ooh, throwing me a curveball. Throwing me a curveball. All right, the Dixie. Well, the Dixie's in different phases. So also keep in mind, and I guess this was a really good choice because it's trend into lack of trend, right? So, keep in mind, like seasons change, so do the personalities of charts. Pretty clearly on the weekly chart, you can see the 21 is just perfect trend, right? In general, what I like to do is just kind of blur the lines between the 21 and the 50, right? See how if you just kind of look at it like a zone, every pullback to that level works. And then when it stops working, it all breaks down. So at this point, you did have trend all through here. And in that instance, you would use your moving averages. Again, I would invite you to consider looking at the 50, 200 kind of cloud, if you will, as kind of a support band, right? You see how every single time it pulls back there, there, there. So that's point number one. At this point, the moving averages are completely sideways, right? They've shifted. So at this point, we zoom in and we would draw our swing levels. So we have a low. We know where the low is, right? 101 basically. The swing high, I would draw it off of this wick. So you see this wick right here? Stretch that across. Now here's the thing. Based on the signals, this could easily go back into trend. But at least for now, it has to obviously break right there, which is major resistance. If it breaks right there, so here's the trick, and this is kind of an interesting one. If it breaks resistance, it goes from being in trend to being in chop, which we use previous highs and lows, and then it could easily go back to being in trend. So what would be the steps for that? Well, let's draw our level, right? That's resistance, and you can see it is acting as resistance. Also note that this is a little slightly advanced, but notice how the 50 is actually holding. So it's telling you, hey, I'm actually starting to respect moving averages. This tells me that this will likely want to break out to the upside soon. So once you get above resistance here, you will have the resistance here in the form of the 200. You always want to respect the 200. And then once that happens, then what you would look for is for it to, if it indeed does break out, which it looks like it wants to, then it should start to respect the 21 on every pullback, right? Same thing over here, right? You see how it's gone into a sideways phase. But technically, at least based on the trend oscillator, it's actually still in trend. You have thrust. This is very likely to go back higher. It would make more sense than going lower, certainly. And then at that point, you would start using the 21 again as support. Nvidia. This one's kind of all over the place. So you have another combination, and you should get used to this because this is really the reality of the situation. Very few stocks are just going to be so perfect all the time. But in this instance, you have a little bit of a messy downtrend here. You see how, let me zoom out. You see how your 200 is sloping lower? I would have a very hard time ever buying anything with a down sloping 200 like this. But you see how your moving averages are a little bit sloppy, right? They're like very kind of liberally cross. What they should look like is this. There should be very little kind of crossing effects. So I would call this kind of a sloppy downtrend right here, all this phase. And so in that instance, I would still use the previous highs and lows. So for example, here's a previous high, right? I think we can all kind of see that. And here would be kind of a previous low, right? So there, here, this low holds on the kickback here. So you see how it even goes back into range here and finds resistance where it should and finds support where it should. There's also support levels from way back here. So from that, from this kind of sideways range, right, you can see the moving average look kind of messy. At this point, they actually are going into trend, right? You actually have trend structure here. And when you have trend structure, especially really high quality trend structure, you'll hold the 21 on all your pullbacks. Now, do I expect for this to continue? Well, it depends on what the market does. But I would expect here Nvidia, barring that the market does something amazing, I would expect Nvidia to make a reconnect down here with the 50 eventually. So I think Nvidia is probably, it's a little bit kind of a not a great case study because it's a little sloppy, but it is, I guess, a good reality version of what you would expect with markets. Rarely are they ever super clean, but I would say that this is more of a um, range that is going into trend. Now, if you see that on the kickback, so here's the trick, and this will actually help you make money. If you see that on the kickback, it does not hold the 21. You cannot buy it until the 50, and that's a big gap, right? The 21 is at 228, the 50 is at 204. If you see that it doesn't hold the 50 at any point, you can't buy it until the 200, right? So you can see how this would then start to change personalities. Yeah, I'll do one more. I'll do one more. I just really wanted to kind of give you guys these notes here and really kind of just drive home the point of when to use moving averages, because I see folks kind of shout out moving averages all the time as if they're gospel when things are not in trend. And you can only use moving averages as dynamic support and resistance when things are in trend. So at this point, XOM is starting to lose its trend. Right? You do still have weak trend here on the weekly. You see how it's holding the 50. That would be kind of considered weak trend. This would be considered good trend. But here's the dynamic, right, that I just told you about. You see when it breaks the 21, it goes to the 50. If it breaks there, there's a support level here, and then it could theoretically get back to 68. On the daily chart, you really don't have trend here ever, because you go from sideways, you get a pop, and you go sideways again, right? That's not trend. It might look like trend because you see how your moving averages are kind of sloping up. But if you look at the quality of it, you only have brief bursts of trend through there, very quickly through here. And then most of the time, it's actually just completely sideways. And that's what it's going to now. You can also, if you have the indicator, you can see that this is not really high quality trend, right? High quality trend looks like this. So at this point, this is a weird candle because that's the candle. I don't believe that's a real candle. That's the candle that formed on that day where stocks opened up weird. But there's your previous high. There's another previous high. Here's your previous lows. Right now, here's the thing: you're in range here. You never really were trending ever during this range. What happens when you break the bottom of the range? It's very likely that this is going to go into a downtrend at this point, right? We've seen where ranges create trends. So in this instance, because you're down at the 200, if you break any further from here, and you can see it very clearly on the chart, if you break any further from here, you will drop quite large. See the red line? Support, red line, support, red line, support. Even here, I would kind of count into support. So this is your last stand. If it breaks here, it's going to go to 92 with the potential to go all the way back to here. So I'll go ahead and wrap it up there, guys. I just kind of wanted to touch base. Yeah, we actually covered Nvidia. Yeah, no, I'm going to go ahead and wrap it up here just because there's the trading day is very active today. So today's not a good day for me to be Professor Sam. At the end of the day, this is what you need, right? Just know what you're looking for. The key thing is just to know when you're in trend. If you're not in trend, then by default, you are in range and you would use structural support and resistance. Ignore the moving averages. That's a little bit of gold that I can give you for today. Is when to use them and when not to use them. And then just be willing to stay nimble, because keep in mind, things that go sideways eventually trend. Things that eventually trend eventually go sideways, right? So it always kind of, all markets always do the same thing. You will go from an uptrend to a sideways consolidation to a downtrend, right? Here you want to use trend support and resistance. Here you want to use trend support and resistance. Here you want to use structural support and resistance because you're in sideways chop. So I'm going to stick around a little bit here in the free room to answer any questions. I won't be looking at any individual charts because you're not in that type of market. This is an all or nothing market, and meaning either your stocks are up or they're down, and today they're down. But I will take some questions from you guys. For those of you watching on the YouTube, thank you for tuning in. Leave us a comment down below. Leave us a like before you go somewhere else on the YouTube and watch a cat video. And I'll catch you for the next time, YouTube. Cheers.